Hello! In this video we will discuss an invoice through an example transaction from the perspective of the buyer. We will discuss the source document, the effect on the accounting equation, as well as the recording of the transaction. The transaction that forms the basis of our discussion will be a business, SA business, who purchased goods on credit from SA suppliers. For the purpose of this example, SA business is not registered as a VAT vendor and makes use of the periodic inventory system. The source document issued by the seller of the goods sold on credit is an invoice. An invoice is a document issued by the seller to the buyer that indicates the quantities and costs of the products or services provided by the seller. The invoice is a written acknowledgement that the seller sold the inventory to the buyer of the goods. In our example, the goods were purchased on credit by SA Business, and therefore SA Business will have to settle the debt at a later date. The first step when dealing with a transaction is to identify the affected accounts. In our example, SA Business purchased goods on credit. The first affected account is therefore purchases because SA Business uses the periodic inventory system. The goods were purchased on credit from the seller. The second account affected is therefore accounts payable. The purchases account will increase with the amount the goods were purchased at. On the other hand, the accounts payable account will increase because the business will now owe the seller the purchase price of the goods. Accounts payable is classified as a liability. The rule for liabilities is that these accounts increase on the credit side and decrease on the debit side. In our example, the accounts payable account will therefore increase on the credit side. Purchases is an expense and is classified as equity. The rule for equity is that these accounts will have the effect that equity increase on the credit side and decrease on the debit side. The purchase account as expense will increase, but the effect on equity is that it decreases on the debit side. The purchases account will therefore be debited. On the basic accounting equation, liabilities will therefore increase with 10,000 Rand. Accounts payable is a liability and increases and will therefore be credited. Purchases is an expense and can be classified as equity. Since purchases will decrease equity, the purchases account will be debited. When the business purchases goods, the business receives an invoice as proof of the transaction from the seller. In our example, the original invoice is handed to SA Business as proof of the goods purchased by SA suppliers, the seller or the creditor. The seller keeps a duplicate invoice for its own record. The buyer will use the original invoice to record the transaction in its accounting records. To record the transaction in the purchaser's journal, in the details column, you need to provide the name of the creditor. The reason for providing the name of the creditor is that the transaction will also have an effect on the individual creditor's account in the creditor's ledger. 10,000 Rand will be recorded in the accounts payable column as well as in the purchases column. At month end, the balances of the subsidiary journals are posted to the general ledger. In our example, the 10,000 Rand recorded in the accounts payable column of the purchases journal will be posted to the credit side of the accounts payable control account in the general ledger. This is the same as the effect of the transaction on the accounting equation. The 10,000 Rand recorded in the purchases column in the purchases journal will be posted to the debit side of the purchases account in the general ledger. In this video, we discussed an invoice through an example transaction from the perspective of the buyer. We discussed the source document, the effect on the accounting equation, as well as the recording of the transaction.